Hi, I'm Nolan Peterson, the CEO of Atlas Salt, and we're developing the Great Atlantic Salt Project on the west coast of Newfoundland. When we're in operations, we'll be North America's first new salt mine built in nearly 3 decades. This is a little bit of a shorter form presentation. Feel free to look at our longer form presentation if this intrigues you, but let's get right into it. So let's talk about the salt market in North America. We at Atlas Salt, the Great Atlantic Salt Project, make just normal sodium chloride, so the kind of salt you might see on your table. But our application for this salt, which is the same, is de-icing road salt. So these markets include, for our product, in North America, the Northeast United States, the Midwest, Ontario, Quebec, and the Atlantic provinces. This is salt that's sprinkled onto roads and highways, and it's used as a road safety issue, infrastructure security, and basically selling to cities and governments. Now, what many people don't realize for something like salt, and thinking that it's in abundance, which it is globally, in North America, we don't produce enough salt for our demand. And we actually import about 30% of our demand from foreign jurisdictions such as Chile and Egypt. So a lack of supply creates new challenges. As I mentioned, North America's last new salt mine was opened in 2001. Discoveries are very rare because you need to have good deposits, which we'll talk about very briefly of why ours is good. Existing mines have rising costs, and there are environmental constraints and concerns. Many of the mines in North America sit under lakes, which makes a huge operational environmental challenges. Since 2001, several aging mines have closed, removing over 2.5 million tons of domestic supply, largely due to those cost pressures, environmental concerns, and of course reserve depletion, which every resource company encounters. We have increasing reliance on imports, which it leads to higher cost product because of shipping, higher carbon emission intensity, longer lead times. It makes it much more difficult to plan your operations and your usage around a source of salt that maybe is 2 or 3 weeks out. And of course, this all leads to security supply risks. So the solution, the Great Atlantic Salt Project. As I mentioned, we're on the west coast of Newfoundland. You can see from this map here, and it gives us key access to all the key markets that we would target, including the east coast of the United States, the St. Lawrence Seaway, Ontario, Quebec, and the Atlantic provinces. We happen to be 3 kilometers away from a deep water port that is accessible to our site by a conveyor, which we plan to install. So we have a large, homogeneous, and continuous salt deposit. We have 88 million tons in reserve and over 1 billion tons of salt in reserve and resource. The in-situ value of this material is over $100 billion US. It's a shallow deposit. Shallowness is the key here. This allows us to develop a mine and operate it inexpensively and cost effectively. Located in Newfoundland, which is a top 10 mining jurisdiction worldwide. And we have, as I mentioned, those key proximity advantages. Lower cost of shipping, and we're also more sustainable since we'll be all electric. We'll be 100% battery electric. We're tied into the Newfoundland power grid, and we will displace overseas imports and leverage into the Buy North American trend that we all see. The project has been significantly de-risked and is literally shovel-ready and sustainable. We have completed all resource drilling on the project. There's no more drill risk, no more drilling required to define it, no more chasing high grade or anything like that. We have not one but 2 feasibility studies, including an updated feasibility study that was completed in September 2025, just a month or 2 ago, that vastly improved the economics from the original feasibility study. We have an environmental assessment completed and approved on the project, which allows us to advance through permitting into construction. That entire process took less than 4 weeks. Early Works Development Plan has been approved. We are a shovel-ready project and we are ready to start construction. There's strong community support and impact. We will create over 170 long-term jobs in the community. These are direct jobs as well as a number of indirect jobs. We have a lot of engagements with Indigenous councils and representatives, and they're fully supportive as well. And we will generate significant tax revenues for local governments and municipalities. And as I mentioned, sustainability is key because we are electrified. We will be 100% battery electric, and we will emit no greenhouse gases. Basically no. The equivalent of 4 Newfoundland households of greenhouse gases per year. The economics are very strong for the project as well. On the left, I want to show you how high our margin is compared to another publicly traded company, which is Compass Minerals, one of the largest producers of salt in North America. They own the Goderich mine, which is the largest underground salt mine in the world. This shows the average net selling price as if we were vertically integrated. Both of us would report our sell price differently, but this kind of bridges the gap for viewers. Shows our average selling price if we were vertically integrated, which estimates in the dark red our production costs, which come from our updated feasibility study, and then in light red is our shipping costs, and then leaves us with the 54% margin. Compass Minerals, selling at about the same price, has much higher shipping and distribution and production costs, and their margins are lower. The reason for this, as I mentioned, is that our mine is newer, it's shallower, it's closer to key markets that we can distribute to, and that is what allows us to operate this mine inexpensively. We will have over $300 million in annual EBITDA, or pre-tax operating cash flow, and over $188 million in life of mine average annual free cash flow. All this for an initial capital of less than $600 million. The NPV is very strong as well as the internal rate of return of 21.3%. Why now? So what investors can look at when they think about this project is the ability to leverage to potentially higher prices of salt as demand increases and supplies become more challenging, and an investor is investing in a company that has already completed an environmental assessment, feasibility studies, an early works development plan, and securing recent financing, including bringing in the company's first strategic investor. Going forward, we expect to unlock a re-rate for the project to secure the value of it by announcing financing, announcing additional strategic partnerships, which we are constantly working on, obtaining remaining permits, and signing potential additional offtake agreements with partners. And then we will advance through construction and finish construction with a 2030 target. Thank you very much. Please feel free to reach out to us at any time for additional information.